Whilst not being exactly the same, the patterns here very similar to those of the XXJ on Friday. The main difference being that the banks really haven't performed quite as well over the past few weeks. As in the ASX 200 review, we had a symmetrical triangle which actually broke to the upside today. In this instance, we have the ascending variety, so there's the upper trend line of the pattern, and here is the lower boundary. As can be seen there today, a nice high close, and if we do break higher over the next few days and again see nice high closes, then it's quite likely that we're going to see a decent movement higher. The measured move out of the triangle as a standalone pattern is basically made by measuring the deepest part of the pattern, then projecting it from the breakout, and obviously that should take us up toward that 7,000 region, and this really is the make or break point. If we can gain some upside traction and get up through 7,000 in an impulsive fashion, then it really does put paid to the larger flat pattern scenario. So until this level is overcome, it's still feasible that we're going to see a wave A up to the wave B and down to the wave C. But as we mentioned on Friday as well, this movement higher is certainly looking a little impulsive in nature. It doesn't really look corrective. In fact, it could be argued that we've seen a wave 1 down into the wave 2, 3, this little sideways triangle, ascending triangle, is a wave 4, and then looking for another probe higher. So certainly something to keep a close eye on. A break up through this 7,000 region in a strong impulsive movement would suggest that we're seeing something a little more bullish unfold in regard to the wave structures. So certainly from an Elliott wave point of view, not a great deal of clarity here, so we'll just concentrate on more conventional patterns, which basically means this triangle. Now the other important aspect on this chart is some divergence. Now it isn't the most potent type A variant, but it is type B, so we can basically see that price has made a double top here. Our divergence oscillator has failed to confirm by making a lower high. So like I say, not the strongest of divergence by any stretch of the imagination, but if we do break down to the low boundary of this triangle, then it's quite likely that an interim top is in position, and we could well see weakness at least until our oscillator rotates back down into the oversold position. So that's just something to keep a close eye on should price head down immediately, but I think here the risk is actually to the upside, and if we can get up through the upper boundary of this triangle, so in other words a break above today's high, see some nice volume, then no reason why we can't see strength at least over a period of weeks and potentially even months if this 7,000 region can be overcome. So still looking good, no reason to be looking for a top at this stage, but if we do see rejection at the high of wave C, then we just have to be aware that we could see that flat correction still, which basically means, as I mentioned earlier, A, B and a wave C, but a push up through this level would suggest that something more bullish is going to unfold, and as I've just mentioned, I think the risk is that we're going to head higher here.